Hi my dear friends, Unacademy, say iconic program, a flagship program for CA final aspirants. Under that, we have my dear friends, live mentoring platform LMP, one-to-one doubt solving sessions are available, evaluated test series, 3-stage test series for each exam attempt. Printed books are providing an iconic flagship program from Unacademy top educators as well as Yashas Academy educators. We too have under the iconic flagship program Discord community building platform. My dear friends, under this particular one-to-one live mentoring in iconic, which is now launched my dear sir for your May 2022 exam onwards, give your exam preparation an extra edge with our new live mentoring platform LMP. Experience personalized learning like never before with our seasoned doubt solvers. Discuss your doubts, clarify your concepts and enhance your exam preparation with just a click on Unacademy application. Get your live questions, queries solved on daily basis from top subject matter experts. Under the iconic flagship program, we have evaluated test series, which is now launched my dear friends, available for iconic subscribers. Give your exam preparation an extra edge with our latest addition in iconic subscription, a 3-stage test series for May 2022 attempt and onwards, live test on 40% completion of syllabus, 80% completion of syllabus and 100% completion of syllabus. 3 stages, 3 tests are conducting for every exam attempt. Gauge your preparation and exam readiness with our latest test series. Test followed by analysis class and detailed evaluation of answers by subject matter experts. Not just because conducting the examination we conducted and leaving as such, it is not so. Once the test you attend that is well valued by experts in Unacademy, expert team of faculties will evaluate the paper and suggest you as a friend, my dear friends, further how you have to present in examination. In first attempt itself you can able to crack the tips to present the examination, also providing based on your test attempt paper, evaluating and giving the feedback to you as a friends. Expert team is going to provide to you to further how to better present in the examination. Further my dear friends, in iconic subscription get personal guidance and feedback from experts basis your performance. Further my dear friends, iconic subscription CA final group 1, you can subscribe 3 months, 6 months, 12 months, 24 months, depends upon your exam attempt and your preparation. Based on that you can subscribe. While subscribing, please use my code RAFI, Rafi, LIVE, live. You can subscribe iconic subscription for CA final group 2 alone using my code RAFI, LIVE. Further my dear friends, iconic subscription CA final combo group 1, group 2 both you can subscribe. Depends upon your requirement, you can subscribe for 3 months, 6 months, 12 months, 24 months for your exam attempt, keeping in mind for revisions and all. While subscribing, please use my code RAFI, LIVE. Thank you, my dear friends. Presenting now in front of you, simplified manner, see a final indirect tax laws. Amendments applicable for May 2022. Paper number 8, Indirect Tax Laws, CF Final. For May 2022, amendments. Simplified manner presenting for a kind consideration, my dear friends, which are as follows one by one. Diagrammatic presentation wherever preferably I am going to present diagrammatic manner. Just look and understand. Once you listen, sufficient, my dear friends. What is the first amendment here? Dear friends, under the Income Tax Act, Section 12AA, entity, registered entities, non-profit entities, charitable non-profit organizations especially, all of them, because the amendment taking place income tax, should be re-registered under Section 12AB of the Income Tax Act. So, Section 12AA should be read as 12AB under the Income Tax Act. You have to re-register. Accordingly, under the GST law also, we have here slight amendment. Wherever you come across Section 12AA of Income Tax Act entity to claim exemption, from now onwards you read, from 1st October 2021 onwards you read, or 12AB of Income Tax Act. Entity registered under Section 12AB of the Income Tax Act also qualify exemption per with Section 12AA. Therefore, I brought to your notice exemption chapter. Under that exemption chapters, charitable sector, where services by an entity registered under Section 12AA, now reading as, or Section 12AB from 1st October 2021 onwards, qualify exemption if they provide the following nature of charitable activities, which you are aware of that. Here there is no amendment. Wherever 12AA, read as 12AA or 12AB of the Income Tax Act. That's it. That's why I brought to your notice the charitable sector. In that amendment, 12AA should read as 12AB, followed by import of services by Section 12AA entity for charitable purposes exempted. Same now should be read as 12AA entity or 12AB of Income Tax Act entity import the services qualify from exemption, provided if they import the services being at Section 12AA or 12AB of the Income Tax Act for the specified charitable purposes qualify from exemption. Likewise, furthermore, we have supply of service by an entity registered in Section 12AA or 12AB, which is inserted from 1st October 2021 of the Income Tax Act with regard to renting of precinct of a religious place meant for general public, where it is per day, per room less than or equal to rupees 10,000, per month less than or equal to rupees 1,000, per day less than or equal to rupees 1,000, per month less than or equal to rupees 10,000, open area, space, Kalyana Mandapam, auditorium, per day less than or equal to rupees 10,000 exempted if these premises precinct to the religious place meant for general public, where the registered person, the person having the status of Section 12AA, now read as 12AA or 12AB of the Income Tax Act from 1st October 2021, which is applicable for your May 2022 exam. Further, my dear friends, likewise, services provided by rehabilitation professionals recognized under the Rehabilitation Council of India Act. Earlier, these services are provided by 12AA entity, now read as toll AA entity or toll AB entity of the Income Tax Act also qualify from exemption. Similar to the further, my dear friends, services by an old age home, services by an old age home run by the central government, state government, local authority, state government, central government, or an entity under section 12 AA or 12 AB now inserted from 1st October 2021 onwards. So, service rendered by central government, state government or unitary or entity registered under section 12 AA of the Income Tax Act, now read as 12 AB of Income Tax Act also, 12 AA or 12 AB of Income Tax Act, if run by these institutions, rehabilitation centers, professional rehabilitation professional centers run by section 12 AA or 12 AB of Income Tax Act qualify exemption. Further, my dear friends, furthermore referring to you here the points, my dear sir. Services by a old age home provided by central government, state government or unitary or 12 AA entity of Income Tax Act. Now 12 AA entity read as 12 AA entity or 12 AB of Income Tax Act from 1st October 2021 if they provide old age home services will also qualify from exemption. Simple to say, wherever 12 AA comes into picture to claim exemption, read as 12 AA or 12 AB of Income Tax Act from 1st October 2021 is the amendment. Further, my dear friends, here the amendment is conditional based. Per member, per month, the value should not exceed rupees 25,000, then only exempted. That you are aware of that. Further, my dear sir, government sector also we now got amendment. Here what happened? Services supplied by government or by local authority to business entity whose turnover in the preceding financial year more than the threshold limit for registration and the value of supply is also be more than rupees 5,000. In such cases is taxable, which is under RCM. In that, one extra exemption has been given here. Apart from the given exemptions, one exemption, entry number 61A. If you refer here, my dear friends, entry number 61A, a new entry has been given here, inserted from 1st October 2021. Services by way of granting national permit to a goods carriage to operate throughout India or contiguous states qualify exemption. So far, prior to 1st October 2021, what happened now, my dear sir? When the services of granting of national permit to a goods carriage vehicle is issued by state government to goods carriage agency, it is under RCM. The recipient being goods carriage agency received this particular license by making the payment, liable to pay GST under RCM. Now it is exempted, no one liable to pay GST. Services provided by way of granting national permit to goods carriage vehicles, that particular fees collected by the state government absolutely exempted from the payment of the GST. Even central government collected also be exempted from the payment of GST from 1st October 2021. Apart from that, we too have one amendment here, my dear. Services, especially if you refer here point number 2, if you refer, you understand point number 2 here. This point I am referring. Services provided to government, central government, state government or union territory under any training program for which with effect from 1st October 2021, 75% or more of the total expenditure is borne by the government, then there is qualify exemption. Earlier, this 75% cap was not there. Even 10% of expenditure borne by the government qualify exemption. Now, expenditure should be borne by the government more than or equal to 75%. Then only this is exempted. Then only this one is exempted. How to understand this? I will bring with one illustrative example here is as follows, my dear friends. Now look here, my dear friends. Validate the following statement. Here, if you refer here, the government of Tamil Nadu granted the aid of rupees 16 lakh to Nicholas Educational and Research Institute for providing training in automotive service technicians 2 and 3 wheelers for the year 2022-23 under the Pradhan Mantri Kushal Vikas Yojana is taxable supply of service under the GST. Total expenditure for providing training is 20 lakh. Now, my dear friends, tell me here, the given statement valid or invalid? Total expenditure is 20 lakh. Government bond how much? 16 lakh. That means 16 lakhs occupies how much? 16 lakh divided by 20 lakhs, which is almost all 80%, meaning thereby government bond the expenditure more than or equal to 75%. If so, such training is carried out by Nicholas Educational and Research Institute. Is it taxable or exempted? It is exempted. Therefore, the given statement is invalid because they said here, validate the following statement. The government of Tamil Nadu granted the aid 16 lakh rupees to Nicholas Educational Research Institution for providing training in automotive services technicians 2 and 3 wheelers for the year 2022 and 23 under the Pradhan Mantri Kushal Vikas Yojana is taxable service supply of services, they are telling. Is it so? Since the expenditure borne by the government of Tamil Nadu is more than or equal to 75%, the given statement is invalid because it is exempted. Answer: the given statement is invalid. It is exempted supply of service since 75% or more of the total expenditure is borne by the central government or the state government, as the case may be. Thereby, I will say that the central government or state government, whenever I say government, which includes central, state as well as union territory, expenditure borne by the central government or state government, as the case may be. I will say that here the Tamil Nadu state government, therefore I will say that here state government, thereby covered under the entry number 72. Even today, after amendment 1st October 2021, it is exempted from the payment of the GST, nil rate of GST. This is what this particular point here I referred, sir. For information, service provided to the central government under any training program for which 75% or more of the expenditure is borne by the government. Government includes central government is department, state government is departments, or union territories is departments. In the given case, is state government, qualify from exemption, Therefore, the given statement is taxable. That is incorrect. That's why I said the given statement is invalid. Such a questions one can expect in the examination also. Further, my dear friends, referring to you the amendments one by one are as follows. In the sports sector also we have few amendments now. What are they? They are as follows. Here entry number 9AA, we already got this exemption. Women's World Cup 2020, because of the pandemic, aware of that, is too difficult to conduct. Therefore, the law amended here by saying that from 1st October 2021 onwards, the word hosted in India should be read as whenever rescheduled to host. If so, in that case, service is provided to the FIFA Under 17 Women World Cup whenever rescheduled to host, or by FIFA Under 17 if they provide these services in relation to the FIFA Football Association, International Federation, International Football Association, FIFA Under 17 provided services in relation to sports, or we provided services to sports, where it is qualify from exemption whenever it is rescheduled to conduct, provided the expenditure should be certified by the Directorate Ministry of Youth Affairs of Sports. Certificate is must obtain. Further, we have a new entry now here. From 1st October 2021 onwards, new entry 9AB. Services provided by and to Asian Football Confederation, Asian Football Confederation AFC, and its subsidiaries directly or indirectly related to any of the event under the Asian Football Confederation Women's Asia Cup 2022 to be hosted in India also qualify exemption. If it is hosted, qualify exemption, and expenditure to that particular Asian Football Confederation or Asian Football Confederation provide the services in relation to the football sports, where the expenditure is certified by Sports Director, namely Director Sports, Ministry of Youth Affairs and Sports should be certified. It is the authorized expenditure. The expenditure is for the sports in relation to football confederation purpose only. In that case, qualify from exemption. Further, my dear friends, entertainment sector also no exemption. Admission to Asian Football Confederation Women Asia Cup 2022 from 1st October 2021, admission to this event qualify from exemption irrespective of the admission fees. Further, my dear friends, further referring from here, furthermore, my dear friends, exemptions wherein amendments applicable for May 2022 examination of CF final. Entry number 19A, services by way of transportation of goods by an aircraft from custom station of clearances in India to a place outside India is exempted supply of services. This exemption now further extended to 30th September 2022 is an amendment. Further, entry number 19B also, services by way of transportation of goods by a vessel from custom station of clearances in India to a place outside India is also exempted supply of service under GST, which is now extended further up to 30th September 2022. This has to be extended. The exemption is an amended provision. Entry number 43, my dear friends, from 1st October 2021 onwards has been omitted. Thereby, now it is taxable supply. One can expect this examination. One can expect this in the examination. Services of leasing of assets, rolling stock asset, including wagons, coaches, locos by the Indian Railways Finance Corporation to Indian Railways. Now exemption withdrawn is taxable supply in the hands of Indian Railways Corporation. Indian Railways Finance Corporation, whatever the release or royalty collected from the Indian Railways will attract GST. Further, my dear friends, likewise I said in the beginning of today's our amendments class, I said, sir, wherever section 12AA of Income Tax Act appears, will also now read as 12AA or 12AB of the Income Tax Act from 1st October 2021, which is in the case of IGST also inserted. Further, my dear friends, amendments in the chapter place of supply. Earlier we have a transaction from 1st October 2020 onwards, transaction B2B, business to business maintenance, repair, overhaul services, MRO, maintenance, repair and overhaul services have been notified as the services for which place of supply shall be the place effective use and enjoyment as the service is given under. Especially they said earlier, supply of maintenance, repair, overhaul services in respect of aircraft engines and other aircraft components, parts supplied to person for use in the course or furtherance of business. Place of supply is location of the recipient. Effective use and enjoyment goes there. Example, if you refer here, you come across this. This example you will be able to identify here. Look, C Limited registered person in Chennai who actually initially imported for overhaul services purpose aircraft engines. After doing that in India, exporting back after overhaul services. But the activity carried out in India. In the given case, section 13, subsection 3, clause A speaks where the performance is actually performed. If it is in India means taxable. To avoid it, the law of the land specifically mentioned by saying that upon the recommendation of the GST Council, the amendment taking place. Effective use and enjoyment goes to outside India to the recipient. Therefore, place of supply is recipient. In the given case, it is outside India. Therefore, export of services. C Limited in India not liable to pay GST. Place of supply goes USA. Effective use enjoyment goes to the recipient. That's why. Further, my dear friends, it is with regard to aircraft. Now, amendment taken place here similar to that. In case of business to business, vessel is considered. Place of supply in respect of business to business, supply of maintenance, repair, overhaul services in respect of ships. The earlier amendment from 1st April 2020, aircraft. This amendment from this particular notification, latest one, is with regard to ships and vessels and other vessels. Their engines and other components or parts supplied to a person for use in the course or furtherance of business shall be the location of the recipient of service. If an Indian company has received maintenance, repair, overhaul services in respect of a ship or vessel from a foreign supplier in a foreign country, the place of supply goes to India because the effective use and enjoyment goes to the recipient location. Recipient in Indian company, Indian ship is given for repair purpose to overseas company. Repair has been carried out to the vessel or ship outside India. In spite of that, place of supply goes to location of recipient. Effective use and enjoyment goes to recipient. As a result, is import of services liable to pay IGST by Indian company. GST is payable under RCM under this for these services. If it is recipient is Indian company, if the recipient outside India, for their vessel repair maintenance carried out in India, in that case no problem. In that case what happened? In that case effective use and enjoyment outside India, place supply goes to outside India. For Indian it is export of services like earlier example, like this example. Earlier it was given for aircraft, now given for vessel as well as ship. Place of supply goes effective use and enjoyment. Where the recipient is located is the place of supply. Further, my dear friends, again I am telling you, it is only when location of supplier or location of recipient from outside India, section 13 series of IGST, when we follow, this provision is whole good. This provision is whole good. Further, my dear friends, under the chapter registration under the GST also we have no amendment. Revocation of cancellation of registration under the GST, under that what happened? There was time limit to apply for revocation of cancellation of registration by the applicant. Application for revocation of cancellation within 30 days of cancellation form GST RAG 21 should apply. Application should be made to the department officer within 30 days from the date of the cancellation order in the form GST RAG 21. 30 days time period. Because of COVID, because of pandemic, so difficulty to approach within 30 days, resulting that recently the government of India, upon the recommendation of the GST Council, amended this provision saying that 30 days insufficient, no problem. If within 30 days of order of cancellation not approached for revocation of cancellation, no problem, further time limit can be extended. That time limit extended is an amendment from 1st October 2021 onwards. Extension of time limit for filing application from 1st October 2021 on sufficient cause being shown and for the reasons to be recorded in writing be extended by the additional commissioner or joint commissioner as the case may be for a period not exceeding 30 days in addition to initial period of 30 days. Further repeating to you, my dear sir, in case where when you talk about revocation of cancellation of registration, application should be made within 30 days from the date of order of cancellation. That time period is insufficient because of the pandemic situation, COVID, now Omicron, that end is coming. Therefore, the government upon the recommendation of GST Council taken a further step in favor of the taxpayers at large. Revocation for cancellation within 30 days you are not able to apply, no problem. There is now extension of time limit has been granted from 1st October 2021 on sufficient cause being shown and for reasons to be recorded in writing. That 30 days initial time period from the date of cancellation order to apply for revocation of cancellation, the 30 days further extended to 30 days by the additional commissioner or the joint commissioner. If that 30 days also be not sufficient, furthermore, the commissioner further exceeds, not exceeding 30 days, time period can be granted for making application for revocation of cancellation of registration. That means initial period 30 days, plus joint commissioner, additional commissioner now can extend to further 30 days, commissioner can further extend to 30 days. Totally now 90 days time period is available maximum to apply for revocation of cancellation of registration. Application can be submitted. Further, my dear friends, amendments in the case of a job work procedure. Yes, job work procedure is applicable to whom? Job work procedure is applicable to principal, not to job worker, where the job worker required to submit ITC 04 form quarterly by 25th day of the following month from the end of the succeeding quarter. This is now got amended. This time period has been amended. Now, the job worker, the frequency of filing the form GST ITC 04 has been revised from this particular notification, which is from quarterly to annually, if not half yearly. In respect of a principal whose aggregate turnover during the immediately preceding financial year more than 5 crore, in that case the form GST ITC 04, which is the movement of the goods from the principal to the job worker to the other job worker, another job worker to principal to the outsiders, like that the movement of the goods should be submitted in form GST ITC 04 by the principal. That can be submitted by him now instead of quarterly, now can submit half yearly once from April to September, 25th of October due date. From October to March, 25th of April, half yearly once. If your turnover is in the preceding financial year more than 5 crores. If less than or equal to 5 crores turnover, they are required to submit form GST ITC 04. Being a principal, the principal can submit it on annual basis, April to March, by 25th of April of the next financial year. Is an amendment. Further, my dear friends, under the tax invoice we have amendment. Of course, from 1st April 2021 onwards, e-invoice is mandatory if the turnover exceeds 50 crores in the preceding financial year. And such e-invoice is mandatory. Generating of invoice reference number IRN is also mandatory, without which the recipient cannot avail the ITC. If there is a case, such e-invoicing exempted for the following categories, irrespective of the turnover. SCZ unit are not required to issue e-invoices, but not SCZ developers. For SCZ developers, e-invoice is must. For SCZ units, e-invoice is not required. They are exempted, not required to issue e-invoice. Insurance company, banking company or financial institution like NBFC are exempted from e-invoicing. Goods transport agency are exempted from issuing the e-invoicing irrespective of the turnover. Supplying the passenger transportation services are also be exempted from e-invoicing. Services, supplier of services by way of admission to exhibition of cinema photographic films, cinema theatres issuing the invoice is immaterial. E-invoice is not applicable for nil rated and wholly exempted supplies. For high C sales, which is not a sale under the GST, which is not a supply under GST, therefore no e-invoice required. E-invoice is not required for the bill of entry imported goods. Free trade warehousing zones are exempted from issuing of e-invoicing. They are the units in India storing the goods from outside India, bringing and storing and exporting outside India. The units are free trade and warehousing zones are free from e-invoicing. E-invoice is not applicable for invoices issued by input service distributor to their other units having the same PAN number but multiple registrations under GST. Further, e-invoicing also will not required where the services are received by a notified person from an unregistered person attracting the reverse charge under section 9(4), especially a contractor, a builder, a promoter who procured the goods from unregistered persons more than the limit prescribed. Over and above that limit are same apply under section 9(4). For them, e-invoice is not required. Import of services, e-invoice not required where the importer liable to pay IGST. Further, CBIC also notified that the central government departments, state governments department, union departments and local authority as a whole government department or and local authority are exempted from e-invoicing. This question one can expect in the examination of May 2022. I am talking about government department, not government entity, not the governmental authority. CA Institute, government entity required to issue e-invoice if the turnover exceeds 5 crores, obviously. But government department, income tax department, GST department, telecommunication department, government department, they are free from e-invoicing. Fisheries department, human resource department, finance department, defense, home ministry, union home ministry, government department not required to issue e-invoice. Local authority also not required to issue e-invoice. Further, my dear friends, amendment under the e-way bill. E-way bill generation facility to be blocked only in respect of outward movement of goods by the defaulting person if I have not filed the return for a period continuously 2 consecutive tax period, returns not filed, my GST number will be blocked for generating e-invoice, generating e-way bill. Generating e-way bill, for me my GST number is blocked to generate e-way bill because I have not submitted for the past 2 tax periods GST returns. If so, as a supplier of goods, I cannot generate e-way bill because my GST number is blocked, but my recipient of the goods can generate the e-way bill if they want to supply the goods to others. Blocking of GSTIN for e-way bill generation would only for the defaulting supplier, only for the defaulting supplier, GSTIN and not for defaulting recipient. That means what? If I have not filed the return for the past 2 tax periods, I want to buy the goods, my supplier generating the e-way bill, I can get the e-way bill. As a recipient I can get, but as a supplier I cannot generate e-way bill. If I am a defaulting person, not filed the return for the past 2 consecutive tax periods. Now, further, here if you refer here, Suspended GSTIN cannot be generate e-way bill as supplier. However, suspended GSTIN can get the e-way bill generated as recipient or as a transporter. How to understand? With the help of example. The example makes crystal clear here, my dear sir. Mrs. Popat and Company, a registered person under GST and paying the tax monthly basis, located at Mumbai. Mrs. Popat and Company has not filed Form GSTR 1 for the last 2 months. Mrs. Gada and Company, a regular return filer located Madhya Pradesh, wants to generate an e-way bill for goods to be supplied to Popat and Company. As per the earlier position of law, Gada and Company would not have been able to generate e-way bill with Popat and Company GSTIN. In terms of the amended position of law, there will be no more restriction in generating e-way bill, as Gada and Company, who is making outward movement of goods, is a regular tax return filer. He can generate e-way bill, though the Popat may be defaulted not filing the return. He is a recipient, he can get my e-way bill. As a supplier can generate. Now, Popat and Company wants to generate an e-way bill in respect of an outward supply of goods to Roshan and Company. As an outward supplier, Popat cannot able to generate e-way bill because his GSTIN is blocked, since he has not filed the past 2 tax returns. E-way bill generation is blocked in this case, as it is outward movement of the goods of Popat and Company, who has not filed the GSTR 1 for the past 2 months. Furthermore, my dear friends, returns submission due date, not a latest amendment but is an amendment. As a value addition, I brought to your notice from 1st January 2021, my dear friends, from 1st January 2021 onwards, the time limit for furnishing the details of outward supplies in Form GSTR has been extended and it is continuing. For registered person opting QRMP, quarterly return monthly scheme, payment scheme, time limit furnishing GSTR 1 return is 13th day of the month succeeding such tax period. Quarterly, April, May, June, by 13th of July, GSTR 1 return. Further, others are considered monthly by 11th day of the month succeeding such tax period. Further, my dear friends, due dates for taxpayers opting for QRMP scheme, GSTR 3B due dates, states has been grouped into 2 groups. For one group, 22nd day of the month succeeding such quarter, for the others 24th day of the succeeding month of succeeding quarter. So, taxpayers whose principal place of business is in the state of Chhattisgarh, Madhya Pradesh, Gujarat, Maharashtra, Karnataka, Goa, Kerala, Tamil Nadu, Telangana, Andhra Pradesh, Union Territories of Daman and Diu and Dadra Nagar Haveli, Puducherry, Andaman and Nicobar Islands or Lakshadweep, 22nd day of the month succeeding such quarter need to submit GSTR 3B return quarterly. Taxpayers whose principal place of business is in the state of Himachal Pradesh, Punjab, Uttarakhand, Haryana, Rajasthan, Uttar Pradesh, Bihar, Sikkim, Arunachal Pradesh, Nagaland, Manipur, Mizoram, Tripura, Meghalaya, Assam, West Bengal, Jharkhand or Odisha, the Union Territory of Jammu and Kashmir, Ladakh, Chandigarh or Delhi is considered 24th day of the month succeeding such quarter is the due date to file the GSTR 3B return. Further, my dear friends, penalty for late filing of return has been revised now with various amended notifications, notification number 19 to notification number 22, which has been issued on 1st June 2021, which I am bringing to a notice as a valuation for your examination May 2022 onwards. It is applicable, these amendments. Nature of offence. What is the here default? For delay in filing of GSTR 1 return, output as liability, GSTR 3B return, tax payment, GSTR 4 annual return supposed to be submitted by the composition scheme levy assessee, and GSTR 7, namely the TDS cases, TCS cases. From the tax period June 2021 onwards, for the tax period June 2021 onwards or quarter ending June 2021 or financial year 2021 onwards, as the case may be, quantum of late fee under section 47 has been revised under the CGST Act. In case of nil return which is delayed, then rupees 250 CGST as well as SGST each, or IGST 500 rupees has to pay as penalty, fine, late fee rupees 500 maximum in case of nil return. Further, tax return aggregate turnover of less than or equal to 1.5 crores in the preceding financial year. If so, they file the return, tax return belatedly. In that case, 1000 rupees CGST, 1000 rupees SGST, effectively rupees 2000 of IGST is the maximum late fee. Who has an aggregate turnover more than 1.5 crore but less than or equal to 5 crore in the preceding financial year, 2500 CGST, 2500 SGST is the fine, maximum fine it is. IGST up to maximum 5000 rupees is the late fee. In case the turnover is more than 1.5 crores but less than or equal to 5 crores. The turnover exceeds 5 crores, if they file the return belatedly, late fee is to be capped to a maximum of 5000 rupees under section 47, which is normal penalty only, 2500 plus 2500, maximum is 5000. Further, my dear friends, here it means to say that 5000 as per the CGST as well as 5000 as per the SGST, maximum 10,000, it is the meaning of that. Section 47 CGST maximum cap is 5000 if the turnover is more than 5 crores and they file the return belatedly, maximum fine is rupees 5000 as per the CGST, equal amount of SGST. Further, for delayed filing of GSTR 4, for delay filing of GSTR 4, the total amount of late fee payable under section 47 of the CGST Act from the financial year 2021 onwards by the registered person, composition taxpayer, who fails to furnish the form GSTR 4 annual return by the due date he fails to submit, shall be as follows. Total tax payable in GSTR 4 return, the tax payable is throughout that financial year. Total tax payable in GSTR 4 is nil, annual return GST nil return. In that case, 500 rupees maximum penalty, 250 as per the CGST, 250 as per the SGST. Further, tax return delayed, GSTR 4 annual return, tax return, tax liable to pay, that return is delayed. rupees 2000 maximum, namely 1000 CGST, 1000 SGST, maximum rupees 2000. For delay in filing of GST at 7, rupees 25 for every day during which such failure continues, or rupees 100, whichever is lower. The maximum is here 100 rupees. 25 rupees for every day during which failure continues, or rupees 100, whichever is less. Maximum rupees 100 as per the CGST, same amount as per the SGST. Further, my dear friends, compulsory audit by a chartered accountant or a cost accountant, section 35 subsection 5 omitted with effect from 1st August 2021 onwards. There is no need of certification required from chartered accountant, cost accountant to reconcile the financial statements. It is self-certification sufficient by the taxpayer itself. Accordingly, the annual return submission also be section 44 got amended, where self-certification has been introduced irrespective of the turnover. If the turnover less than 2 crores, no need to submit the annual return GST R9. If required to submit GST R9, it is sufficient to have self-certification by the taxpayer itself. No need to obtain any certification from practicing chartered accountant, cost accountant. Section 35, section 5 of CGST has been omitted, scrapped. Further, my dear friends, refund chapter amendments. Time limit 2 years from the relevant date to make application for the want of refund, where amendment taken place. In case of deficiency in refund application, limitation period of 2 years, time period to apply for refund. For making refund claim, to exclude the time limit from the date of filing the return refund claim till the date of communication of the deficiency. For example, my dear, I made application for the want of refund when I made, let us say, after 1 year 9 months. So within 2 years, 1 year 9 months lapse, I apply application now. Within 2 years, my application taken, and they send the back to me with some deficiencies. I am rectifying and coming back to submit. By the time 2 years 1 month time taking place. That means I submitted originally refund application within 2 years, but deficiency taken place, thereby that has been returned back to me to resubmit, and I am resubmitting. By the time of resubmitting, 2 years 1 month. In that case, my refund application will be time barred. To avoid this practical situation, the time period taken to resubmit the application for refund is coolly excluded from computing 2 years time period. Thereby, my application for refund will be valid to get refund. Is an amendment pro to the applicants. Further, my dear friends, under the GST, furthermore refund, earlier we won't have facility to withdraw refund application once we made. It is up to the department to dispose. Now the facility has been granted to withdraw the refund application by the taxpayer himself. That facility is available in the GST network portal. If so, whatever debited the electronic credit ledger at the time of making the application will be recredited to you when it is withdrawn by the applicant. Further, my dear friends, no restrictions on receipt of deemed export supplies in availing ITC of the tax paid on such supplies. If I am a holder of advance authorization, I received the goods as a deemed receipt, deemed export receipt for me. I can, whatever the GST paid on such receipt, I can avail refund. If so, for me refund is applicable, why not the same GST will be ITC? So the lawmaker says that if you are eligible to claim refund of deemed receipt of goods, the recipient is eligible to claim refund. Such cases, the refund amount instead of refund can claim ITC, well allowed, is an amendment. Further, my dear friends, order of release of withheld refund to be issued where the refund no longer be liable to be withheld. Order for complete adjustment of demand for refund not required to be issued. What do you mean this? How to understand this? Dear friends, earlier the case where refund is completely adjusted against outstanding liabilities, demand, and an order giving details of the adjustment was issued. After that, the said proviso has been omitted. Accordingly, no such order will now be issued. Today, proviso to rule number 92 sub number 2 speaks that has been inserted to provide that where the proper officer or commissioner is satisfied that the refund is no longer liable to be withheld, he may pass an order for release of withheld refund in prescribed form. Meaning what? Earlier, my dear friends, I claim for refund rupees 2 lakhs where I am liable to pay tax, output tax due rupees 1,50,000. That time department withheld this particular 2 lakh, adjusting 1,50,000, balance 50 only granting. Now it is not so. These two are independent. My outstanding amount will be separately recovering from me. My amount of refund withheld for adjustment should not be withheld for adjustment. Grant entire 2 lakh refund. Not required to adjust against my output as liability. You grant me 2 lakh rupees refund, I will pay my liabilities. If not paid my liabilities, you issue the show cause notices. So is the way in which this amendment has been taken place. Further, my dear friends, one more amendment also be taken place in the given case under chapter refund. Rule number 96 of CGST, which talks about payment of IGST claiming refund, contains the provisions of relating the refund of IGST paid on goods or services exported out of India. Now, rule number 96(7) of CGST provides that in case where the claim for refund was withheld for specific reason and subsequently the applicant becomes entitled to refund of the amount withheld, the concerned jurisdictional officer shall proceed to refund the amount after passing refund sanction order. After passing refund sanction order, the applicant becomes entitled for refund amount withheld. The concerned officer will proceed to refund. So refund will be granted after passing refund sanction order. Now it is not so. The said rule has been amended. Now the concerned jurisdictional officer is required to first pass an order of release of withheld refund, and then he will pass refund sanction order in case of the applicant who becomes entitled to refund withheld. Earlier, whatever refund withheld, after passing the refund sanction order, refund will be granted. Now, refund should be granted well before issuing the refund sanction order. Is an amendment taken place under the chapter refund. Further, my dear friends, under the customs law, there won't be any amendments from 1st May 2021 to 31st October 2021. Further, amendment in the foreign trade policy we have. This foreign trade policy 2015-20 actually expired on 31st March 2020, which has been going on extended because of the pandemic situation. Now this has been further extended up to 31st March 2022. That means the existing foreign trade policy 2015-2020 is applicable for your May 2022 examination. Further, MAS, Merchandise Export from India scheme, has been replaced from 1st January 2021, which is already amended provision, which I explained to you. Again repeating here, a new scheme has been brought into force, namely called as RODTEP, namely Remission of Duties and Taxes on Exported Products. Remission of duties and taxes on export products to cover more elaboratively than that of MIS. Further, my dear friends, here we have exemptions from IGST and GST compensations on account of import of goods by advance authorization holder, by export promotion capital goods holder, EOUs, electronic hardware technology park, software technology park, or BTP units, biotechnology park units. If they receive the goods from outside India, they are exempted from payment of IGST, provided they manufacture the goods and export, physical export. Goods can be sent outside India is called physical export. Then for that purpose they import the goods, are exempted from payment of IGST as well as GST compensations. That exemption now further granted till 31st March 2022. Finally, the last amended provision under the foreign trade policy. To par international trade and practices, the government of India now fine-tuned their existing foreign trade policy. Principles of restrictions and prohibitions for imports and exports revised now in line with the international agreement, wherein from 1st August, namely 10th August 2021 onwards, principles of restrictions and prohibitions for import and export of goods have been revised. How and all is as follows, my dear friends. Director General of Foreign Trade (DGFT) may, through a notification, impose prohibitions and restrictions. 1. Namely, point number A, on export of foodstuffs and other essential products for preventing or relieving critical shortages, on imports and exports necessary for application for standards or regulations for the classification, grading or marketing of commodities in international trade, impose the restrictions or probation or restriction. Further, on import of fisheries product imported in any form for enforcement of governmental measures to restrict production of the domestic product or for certain other purposes. Further, on import of safeguards country's external financial position to ensure a level of reserves. Prohibitions, probations or restrictions on imports to promote establishment of a particular industry. Probation or restriction for preventing sudden increase in import from causing serious injury to domestic producers or to relieve producers who have suffered such injury. Probation or restrictions for protection of public morals or to maintain public order. Probation or restrictions for protection of human, animal and plant life or health, relating to the importation or exportation of gold and silver, prohibition or restriction necessary to secure compliances with the laws and regulations, including those relating to the protection of patent, trademarks and copyrights, and prevention of deceptive practices, relating to the product of prison labor, for the protection of national treasures of artistic, historic, archaeological value, further for the conservation of exhaustible natural resources, for ensuring essential quantities for the domestic processing industry, prohibition or restrictions on essential to the acquisition or distribution of products in general or local short supply, for protection of country's essential security interest, relating to feasible materials and other material from which they are derived, relating to the traffic in arms, ammunition and implement of war, take in time of war or other emergency in international relation, or in pursuance of country's obligation under the United Nations Charter for the maintenance of international peace and security. Now the DGFT has been given the power to regulate prohibitions, restrictions to meet international compliances, because foreign trade policy deals with international trade practices. That's it, my dear friends. These are the amendments applicable for your May 2022. I am highly thankful for listening this particular amendments class. Thank you to all. All the best, my dear friends.